Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys, we again will take a look at the Japanese yen because the Japanese yen right now is the most active currency among other currencies that we are monitoring. Euro currency is also active, but stands down in the retracement. We have discussed mostly this subject and have told everything concerning this retracement. We just need some reaction on the support area that market has reached, but no reaction still we have. So maybe some Brexit agreement that have been achieved recently could impact on the euro currency. But guys, we should not overestimate the last agreement because mostly it will be decided on the referendum in the United Kingdom. And as Cameron said, if people will decide to exit the European Union, so these agreements will be cancelled. That's why yes, agreement have been achieved, but what in reality we will get is a result of the referendum. That's why guys, currently, although we will speak on the Japanese yen in today's video, in today's weekly research, we also have put the update from the Phantom Consulting on the situation on the cable on the Great British Pound, since it's really interesting and we have long-term analysis, long-term expectation on the Great British Pound, and we're tracking this currency. Mostly this analysis in our view is bearish on the Great British Pound. So this is some interesting update from the fundamental part on the cable. So I think that will be interesting to read. Right now, let's speak on the Japanese yen. Actually, guys, we have prepared the short-term update just yesterday. That's why this is not really something really big event will happen in the current video. What we would like to say that in the coming 1-2 weeks we probably will monitor for upside retracement, and that's why we would like to speak on the details in this possible retracement. So we know right now that on the weekly chart market stands in the strong oversold and at fib support that stands around 1061, 1060 area. So this is in fact the low for nearest couple of weeks probably. As we said last week that yen will have the problem to create the new low and probably will be limited in the upside in the downside potential. The only some significant geopolitical driving factor, some unexpected big event could push Japanese yen lower. But with the absence of such events, the market will continue to move lower. And this really has happened. So you can see this relatively flat, relatively calm week, not something really outstanding. In fact, this is the inside week session compared to last one. So that was really miserable plunge on the 2 weeks ago. The feature of the oversold condition, guys, stands so that although market could be oversold on the weekly chart, but at the same time, on the daily picture, market could freely fluctuate in some range, so some patterns could be formed. Until these lows. For example, if market will form some bearish pattern, you could trade it, but if target of this pattern stands above these lows and will not break these lows, because weekly oversold will prevent market to dropping lower, but it lets market to fluctuate till these lows. For example, we have the bread and butter sell, and we could take the short position, although market is oversold on the weekly chart, because target of the bread and butter stands above these lows. So this is the feature of the higher time frames oversold condition. This is very useful tool. Also, guys, finally speaking on the bread and butter, as you can see, we have the classical bread and butter right from the first fib resistance. So the thrust down, reaching on the first level, close above the 3x3, reaching on the first fib resistance, and retracement down. We haven't got ultimate bread and butter because we just haven't got the Bank of Japan intervention. So we said that, well, this is very comfortable condition for taking the intervention, but as you can see, Bank of Japan has not dared to do this. That's why we just have classical brand bar that already has been completed. Now the major question, what kind of the upside retracement we could get? And here, guys, we have more than just a single scenario. So let's discuss them. First scenario is very simple. So on the 4-hour time frame chart, we have talked on it yesterday. So you can see that's the 618 support of this move up. This is the target of the brand body, and then has been achieved. The most simple scenario just to getting simple ABCD pattern to the upside. In this case, we could reach the 11650 area. So it's also natural support resistance area, as you can see. Support again. Market has broken it down. Now it will become the resistance, so market will retest this area. Why we expect deep retracement? Well, we have discussed this many times already, mostly because market stands at the strong support on the monthly and weekly chart, and market is oversold on the monthly and weekly chart. And in fact, guys, to be honest, we have the Jordan-Napoli bullish directional pattern on the monthly and weekly chart, and this pattern calls stretch pattern. So stretch is a combination of the support, fib support, and oversold, bullish stretch, and it suggests some deeper retracement to the upside. That's why we think that market hardly will be limited just by the single leg of the retracement, and it will turn down after that. We think that this could happen only, as I said, by the external driving factors, geopolicy or something of that sort. If market will stand on its own and will be driven by the normal technical and market rules, it should show another upward leg. That's what we particularly will be watching for. At the same time, guys, we're not really interested in how definitely this retracement will happen. For us, the major point is that to get this retracement per se, whether it will be A, B, C, D, or some other scenarios that we will discuss right now, we do not care much. What we really do care is that to get the suitable point, acceptable point where we could take the short position with the continuation of the bearish rally on the higher time frame charts. That's our major primary object to watch for. That's why we will not discuss how to trade this on the long side of the market. But you could do this if you feel that you will succeed, and if you know how to do this. So this stands a bit beyond the scope of this video. So right now market stands at the fib support, as you can see, and the first scenario is possible ABCD retracement up. At the same time, guys, I'm not sure that it will start right from this area. We will talk about it on the hourly chart a bit later. Second scenario, guys, that we could get, for example, if market will drop lower right to these lows, will show the wash and reads of these lows and turn to the upside. This will be some kind of the double bottom here. And after that, market could start move up. Also, guys, this could take the shape of some kind of the double ripple buy lookalike pattern. I call it lookalike because market already has met major 3-8 resistance. Double ripple usually assumes not reaching of the fib level, so retracement up should be short. But since we have hit already the major level, this will not be the pure double ripple. This, at best, it will be double ripple lookalike. If market will show some kind of the double bottom on the 4-hour time frame chart. Finally, the most ultimate scenario, why we can get here the butterfly buy. So imagine that this could be the left wing of the butterfly. After minor reaction here, as a response of this fib support, market could turn to another leg down. It's also possible because this bearish momentum very strong. The weekly oversold will not be the barrier for this action, mostly because this will take some time to form this butterfly, maybe 1-2 weeks before market will hit the target of the butterfly. Maybe market will not be oversold already on the weekly chart, but this also could be possible. Let's call it as the most ultimate scenario, and we will talk on it only if 2 other scenarios will fail. So that's why we will go through it step by step, and we will start from the scenario that is most probable right now. If this scenario will fail, this ABCD, we will turn to the next one. That will be the double bottom, and so on. So now about moment why I think that market could not start right from this area. Take a look at the hourly chart. On the hourly chart, guys, as you can see, market has finalized the brand body in a very cool manner. So you can see the target of the brand body has been hit by the forming of the butterfly pattern. It's very nice. And minor retracement and reaction of this butterfly already has happened. But what I do not like with this overall situation. First of all, take a look that we have the acceleration down right at the completion point of the 1618 of the butterfly. This is negative sign. In most cases, this could lead for the failure of the butterfly, or if it will not be the failure, because market already has shown the minor retracement here, but further continuation is very probable. Second, guys, and the most important moment is that market stands just a few pips above the major target of this A, B, C pattern. The 100% target has been hit here, then market turns to some sideways consolidation, and then drop lower, and here market stands just 30 pips higher than the 1618 target. That's why, guys, I'm not really believe that better to say I better to wait when the market will hit this level before upward retracement will happen. So that being said, it's really big chance that this butterfly will shift to some kind of another butterfly, minor butterfly could be formed, and this butterfly will become the part of something bigger. In most cases, usually this is the hint on appearing of the free drive buy pattern. It's really probable. That's why, guys, if you would like to trade it long, you will have the choice either to take position here immediately, but you will have to place stop below 1618 target, because the real invalidation of this scenario is here. And if market will drop here and then turn to the upside, this will not be the breaking of this scenario. Or second opportunity is just to wait what will happen, whether the market will form another minor butterfly here or just turn down right to 1618, and here think about the taking the long, but don't place stop here. This will be very risky. Personally, I do not want I have no intention to trade it on the long side of the market, mostly because the longer picture is more interesting for me, and it's all other stuff that we have right now on intraday charts not really the primary object for me. So I mostly will wait for entering short here. But if you trade on intraday charts and you're a scalp trader, be careful with this target, since market really has big chances to complete it before any upside reversal will happen. So guys, that being said, this will be the first setup that we'll be watching for on the next week. If market somehow will fail with this setup and drop below 12 even area, this will mean that we will not get the ABCD pattern. This will mean that we probably could get the double bottom. And after that, we will be watching for the double bottom. If double bottom will fail, well, let's see what will happen. Maybe market will form the butterfly that we have discussed here. That will be the final scenario. But anyway, within the coming 1-2 weeks, we probably will be watching for upside retracement. How it will finish and where we will be able to get the entry point to join with the bearish trend continuation on the higher time frames.